Hey trader, it's Richard K from Price Action and Income, and welcome back to another market geometry video where I'll be showing some symmetry in the markets. I've also recently been asked by one of my YouTube subscribers to run through an example of a currency pair where I decided to go through the AUD USD and just basically run through my methodology and how I draw my market geometry lines, starting from a higher time frame and then drilling down to a lower time frame, mostly with the prospect or the just to know where you're basically lying in the bigger scheme of things, and if there would be any trading opportunities with relation to where price is with market geometry lines and so forth. If you've guys been following my previous videos, I believe it was 2 or 3 videos back, then I've shown some of these techniques before, and I will be using them today to discern whether AUD USD might be at an important level for an opportunity to probably take a reversal trade to the upside, either soon or at some stage later. But nonetheless, I just want to quickly run through some of the analysis I've done on the AUD USD, and in this case I'm starting on a monthly time frame, which is a pretty large time frame to use, just because I really wanted to see where price is at the moment, which levels price is trading on the horizontal axis, and then obviously some of my angled lines from market geometry, which I will be pulling in right now to see if there is some sort of confluence of lines that might be a potential support zone for the AUD USD. Now, whether it's just going to be a large trade to the upside or not, it doesn't matter. This is a monthly time frame, so if price does bounce higher from either these levels or slightly lower, there might be a good opportunity to make some profits to the upside. But this is not trading advice, guys. It's more of a trading video. I'll give you a bit more of a better insight of how I use my market geometry lines using different time frames. So here again, I've got data on TradingView going back all the way here to what was this, May 1993, and basically prices just tested this previous low. Price went up, obviously went down, made a very important low in April 2001. Made a very important high in July 2011, and since been a strong downtrend coming lower. So that's very easy to see, as obviously all after the fact stuff, but what I do find interesting is what I'm going to be showing you now with my market geometry. So the first thing I would normally like to do is to see whether, if I use very important pivots like this one here, that one there, your major highs and lows in the market, to see if I use market geometry, if in hindsight price would have respected at important highs or lows my market geometry line. So in this example, as you all know, I like using my pitchforks, and just by selecting my pitchfork, I want to see if this high would have been able to, come in an important high at market geometry level. And this is one I'd done after the fact. But if you draw a pitchfork, in this case, let me just switch this to a standard pitchfork. Then using this ultimate low here to that higher high over there to this higher low over here, pretty much gave you this high in August 2011. I wasn't obviously trading at that time, but after the fact, as price came down, you'll start seeing that to some extent price still respected these lines, but not that great. So what if we then switch between a standard and maybe a shift pitchfork? Then on the shift pitchfork, you'll see that price came up to this 50% dashed median line, which is above the upper median line there, which was also a bit of a confluence between your standard and your shift pitchfork, and price came down. Obviously, again, guys, I didn't trade this, but you'll see now that price is not respecting these lines anymore, sort of also stopped short of this lower median line over here and sort of floated in the air before it came down again. So this makes me think that the angle or the slope at which this market's operating in, there must be something else that I can be drawing here. And this is where I played around with my pitchfork lines or settings, selected that high 1996 to this low in April 2001, extended that to that high, and now you can start seeing that although price after the fact missed this lower median line here. Remember, we use this pivot, but it's quite often a good indication to see if price previously would have respected these lines. It sort of missed the lower median line here. And then here, since August 2015, price been bumping against it and broke below it. So now we are actually at a 50% dashed median line over here, which in the bigger scheme of things, remember we're looking at a monthly time frame, could be a pretty strong level of support. But look what happens if I now go to, listen, if I went to original, we're in the middle of the air somewhere. Price did not really respect any of these lines historically. And this is why I'm going to show you it's very important to play around with your settings. And if we go to the modified shift pitchfork, then all of a sudden you'll see that price has in the past reacted at this lower median line. Obviously we used that as our last pivot, but it's good to see where it reacted before. Price also broke below the center median line. It found resistance there once, came down, had a kiss goodbye as we call it, went down again, found temporary support, broke down it, and then since January 2016 on 1, 2, 3, 4 occasions struggled to get through this lower median line and has since traded lower. And this is where I'm thinking we are at some important support levels from a market geometry perspective. We are at the lower red warning line of this modified shift pitchfork, but in most cases I would like to see a confluence of multiple market geometry techniques. And just by looking at how price actually reacted from this median line there, the center median line, and this lower median line here, makes me think that, or made me think, and which I'm going to show you now, that if you guys remember my previous video, I used Babson's reaction lines. If I were to draw it from the low in April to the high in July 2011, extend it back to this low, although it undershoot this lower median line, you'll see that price broke below this action-reaction line, also gave a kiss goodbye, and fell lower. Now, if we copy and paste this and extend it forward to that line there, it also gave us this high here. This was actually a little bit of a higher high than this high over here, but nonetheless, price kissed goodbye and it went lower again. And this is why I'm thinking that this angle of the modified shift pitchforks actually the best setting to use at the moment, because my Babson's action-reaction lines are also confirming the similar approach where price actually came back and found resistance on these lines and moved low again. So if you see now that price, although we made slightly higher high here, it came down, it has now also reached the lower channel line of this Babson action-reaction line. And although we have now entered and not quite broken below this October 2008 low, we are within an area where potential support might creep in. And I would say that this low red warning line will most probably hold price quite well, and we might get a bounce to the upside. Now, how high this might be, we'll have to see. And obviously, there's more techniques that you need to follow by drilling into lower time frames to figure out if you should be taking a trade to the upside. But I also want to show you something, is that when you often find underthrow below your lines, although price struggled to close below this low median line here, but if you ran a parallel line, let me just find that line properly. Oops, guys. Run it to that low over there and extend that below here. There can still be a possibility that price wants to undershoot this area. But if you're looking at this area, and again, guys, this is on a monthly time frame, that's quite a massive move, then I would definitely think that support can be stepping in here. Obviously, this is not a trading recommendation again, but nonetheless, some very, very cool angles at which this market is operating in, and at very important levels, i.e. your lower red warning line and this Babson action-reaction line that price has just touched. And this is where you can then go into a smaller time frame. If you've done your analysis on a monthly, I would say you can go to a weekly, and you'll see that price has already opened this trading week the 9th of March, around about this level where 0.601 somewhere, it went straight down. It touched these lines that I shown you earlier on and has reacted immediately to the upside. Now, whether this is an important low remains to be seen, but this is where I would, for example, start waiting for, at least since we looked at the monthly, we drill down to a weekly and see that if we use the weekly to figure out what this sort of move was all the way down into this lower line over here. And this is where some price structure analysis or Elliott wave can be quite handy, although it is a bit of a difficult analysis to do, especially when applied to trends. In a bigger picture view, I do see some sort of evidence that we might have had a triangle here. So this could be a first wave, second wave over there, and this could have been a third, a fourth, with the fifth wave actually completing now. Now, whether this was the first wave down of a much larger wave to the downside remains to be seen, but I think there's enough evidence to suggest that either at current levels or these levels where price is at now, that we could get a move back to the upside, maybe even as high as the September 2017 highs. That being said, this could be a 1-2, and this could be our third wave that just ended over here. Price could then now correct to the upside and still make it down into this area at a later stage. But either one of these scenarios does suggest that we are in or at a very important zone at the moment where we could expect a deeper bounce to the upside. Now, obviously, guys, this will be a reversal type of trade. The trend or the major trend is still down, but you could, for example, after we looked at the monthly and the weekly, then drill down into a daily chart, for example, and then wait for a daily close and decide whether this bar really looks like a large raining pin bar to see if we get any sort of reaction from this to the upside. And in my opinion, I would actually wait for some sort of higher high followed by a, sorry, let's get that line again, a higher low, and then attempt entering with some sort of market structure. Use strict money management entries, know where your stop loss would be, and see if you can target at least to the upside the previous highs that was formed, or lower highs that was formed on the way down, which would be these sort of levels. Just be careful that we are currently approaching this sort of support area that could turn into resistance at the moment. But if price starts breaking into this sort of area, that could be a good indication that we'll get either a correction or larger moves to the upside sooner than later. And that, guys, is pretty much how I draw my market geometry lines. I love drawing them starting from a higher time frame, especially when you're not sure where price is and it just seems like things are coming down forever. It can be a good idea to really go back, display all the data that your data provider might have. In this case, I used TradingView. I used a monthly chart, and I just played around with my pitchforks, trying to figure out which angles or slopes operate the best. In this case, we used a modified shift pitchfork in a pretty strange way, but that's just the way the markets work. It's up to the technical analyst to figure out what is going on, and just by playing around with these different pivots and using different settings on your pitchforks, I discern that I believe this is a pretty important angle or slope that the market's operating in. Yes, it's been breaking down below these lines, but they are a confluence of multiple market geometry lines here at the moment. Just also be aware that if we run a fib retracement from this all-time low here in May 2001 to this high, that price has also not reached the 0.786% yet. Previously, had a reaction here from the 0.618% and went upwards and since broke down. But because we are at multiple market geometry lines or confluence of multiple market geometry lines, I do think we can get a bounce to the upside. But just rather than jumping straight into this, we'll have to drill down, follow a strategy like the EPS strategy that I teach to my members, and drill down maybe to a daily time frame and see if we can trade a higher low. Right, guys, that concludes today's video. I hope you found it interesting. I'll start doing a bit more analysis or live analysis on some currency pairs, maybe some of the commodities in later videos, once a month. So please stay tuned, and if you haven't done so already, then please subscribe to this channel and hit the like button, and you'll be notified next time we deliver a video, which we try to do at least once a week. Alright guys, that's it from me today. This is Richard K from Price Action Income. Goodbye.